NVIDIA has more downside pressure on it versus upside, and that has been determined by the options market. NVIDIA's gamma levels are negative. So what that means is the people who make markets for NVIDIA, market makers, are now short on gamma. They're negative gamma, which puts an enormous amount of pressure on NVIDIA to go lower. And we're seeing that in market open because of some news out of China and some violation rules, or violation of some rules that NVIDIA did when it came to importing. So what does that mean for the S&P? Well, S&P 500 is positive gamma. So the market makers who make a market for the S&P 500, futures and future contract, or futures, and when you buy SPX and this, that, and the other, they are positive gamma and have been pretty much all last week. But the problem is, and this is where the turning point happens, is the systematic funds. These are the insurance companies, the big hedge funds, big institutional algorithm-driven funds like vol funds, CTA funds, and those kind of risk parity funds are all at 5-year highs when it comes to the deployment of their capital into equities. Let me repeat that again. They are at their all-time highs with all their capital towards equities. So if an event, a news headline comes out this week, like the FOMC meeting, and it becomes a buy on the rumor, sell on the news event, and you see a 2% move in the S&P 500, you will start to see selling by these systematic funds. Well, when they start selling, you could see a $40 to $50 billion sell-off when it comes to the amount of options that are going to be sold off or bought, and that would cause the S&P 500 to go lower. Take into account, NVIDIA has a negative gamma as well, so there's more potential for downside in NVIDIA, and it's 8% of the S&P 500. We could see this week become the week where you see a major repricing of artificial intelligence companies, and primarily the top 10 holdings in the S&P 500 market cap weighted S&P 500. So these funds are all mathematically driven. They benchmark off volatility, and right now volatility is so suppressed. Remember, it's a suppression of the spring, and if the spring is all the way to the bottom, there is nowhere to go other than up. That means volatility spikes, triggers these algorithms to sell, and this is where you get a sizable, quick downward move in the indexes and in the individual stocks. So as we come into the FOMC meeting, there's according to Polymarket, it's over 80% chance they will lower rates by 25 basis points, and less than 15% they will lower by 50, which it's like, okay, 25 bips, that's it. Could cause a repricing of everything to lower lows and lower highs. Risk manage, subscribe to the Best of US Investors to talk about this more every morning on the Morning Edge, along with receiving Carrie's best stock ideas, the Tell Sheet 12, which is up enormous this year. 12 of those companies on Carrie's Tell Sheet that I've selected through some quant modeling, and now we are killing it with the Tell Sheet 12. So sign up for the 14-day free trial, give it a try, hit the link in the profile. Have a great day, and always live loud. See ya.